Hi guys, let's move on to the most important topic in entire section B5 unit. So B5 annual profit plan and supporting schedules. The most important topics are this lecture and the next lecture. So one is cash collections schedule and the other one is cash disbursement schedule. So both are very easy if you stop trying to remember stuff and start trying to use your brain. I'm sorry, I might sound rude, but students are stupids when it comes to this lecture, this particular topic, because they try to by heart something or they try to have a format or a template like, sir, give us a pro forma and we will fill the numbers there. It doesn't work like that. Every time the question requirement might change. Your pro forma, your template, your format should change according to the requirement of the question. So do not try to learn anything here. Do not try to by heart or remember anything here. It's pure common sense. Based on the requirement of the question, you prepare the budget, you prepare the format. Okay. So if you are not in the right mindset, do not watch this lecture now. You should be in a very clear mindset if for you to, have the proper mindset for this lecture. All right, let's start with that. I don't want to get overexcited or anything like that. So let's start. So the first one is cash collections schedule. So the cash collection schedule is the very essential tool, basically talking about when and how much cash do we collect from the business. Sir, what are the cash inflows for any business? Your sales. So when you sell a product, you give some credit, you sell some on cash, some cash you receive immediately, some cash goes into the next months. Simple. Chalo, see here. So you can the businesses can estimate the amount of cash they can expect to receive based on the projected sales, so allowing for more efficient cash flow management. So why do we prepare the cash collection schedule? To forecast the cash inflow and to manage the cash inflow. Okay, that is all theoretical. Now let's see a small calculation part. I'll also do a couple more new problems which are not there in the material, so exclusively for the students who enrolled for the lectures. That is not available for students who just purchased the material as such. So let's see. See here, a company has the following projected sales. We have the Feb, March, April, May, and June. Immediately, the first thing that I would do if I am the student, what I would do in the examination is immediately take a pen, paper, whatever it is, and start doing this. Sir, obviously, I don't have Excel in my MCQ section. Excel is only Excel is not available in CMA examinations. So you cannot do Excel. You have to put it on pen and paper only. Don't try to take a scale, pencil and draw tables and all. Don't do stupid chiller things. It's your working notes. You don't need to do that in a neat presentation, sir. Not needed. Your rough copies will be immediately shredded out. They won't even be submitted to IMA. So no need of drawing tables and designs and all that nonsense. Just put, understandable manner. Okay. So we have the Feb, March, April, May, June. So I'll start with Feb, March, April, May, June. These are the given months. And we know the projected sales amounts are given in the question. So you can see projected sales. So I'll just put that as my first line. And for my OCD purpose, I'm capitalizing. You don't need to do it in exam. So Feb 180, then March 220, April 400, May 480, June 684. These are the projected sales numbers. All right. Now look at the requirement of the question very easily, very keen observation. Assuming that 5% of the sales are uncollectible. 5% sales are uncollectible. Very good. So less uncollectible. 5% of the sales are bad debts. Straightforward. So they did not say 5% of credit sales. They said 5% of sales. Don't use your over smart brains. They specifically said assuming that 5% of the sales are uncollectible. Go ahead with it. So now 5% of sales is into 0.05. So these are the uncollectible. Then we'll have the collectible sales. That is the remaining 95%. Okay. Following. Followed till here? Nothing to not follow, to be very honest, but still, I hope you are all with me throughout, right? So total projected sales is given, 5% of that is said to be uncollectible. So the remaining amount is calculated as collectible, right? What is single H? Okay, yeah, that looks good. Okay, so we have the collectible sales amount. All right, now prepare a cash collection schedule for April, May and June. Sir, they are only asking you to prepare the collection schedule for April, May, June, not for the entire given months. Only April, May, June they are asking you to collect. Okay, cool, no problem. Now, the collections are as follows: 30% from the sales 2 months prior. All right, I am putting those numbers here. And 50% of the sales 1 month prior. Good. And 15% from current month sales. Sir, what is this nonsense now? Very simple. So whatever you are collecting in April, whatever cash collections you get in April, those collections include what all? 30% from the sales 2 months prior. Means 2 months prior sales is what? February. So if I'm talking about April, 1 month prior is March, 2 months prior is February. So from the February sales, you are receiving 30% in April, and from March sale, you are receiving 50% in April, and from the April sales, you are receiving 15% in April itself. Does that make sense or not? Sir, pay attention. 30% from sales 2 months prior. Sir, we are required to prepare April, March, April, May and June. So in April, you are receiving 30% of the 2 months prior sales. 2 months means what? 1 month is March, 2 months is February, 2 months prior is February. So out of the February sale, 30% you are receiving in April. Now the question is, sir, 30% of collectible sales or 30% of total sales? Big question. Here it said sales, not collectible sales. They clearly said sales. Second confirmation. See, 30% 2 months, 50% 1 month, 15% in the same month. Total check. 30 plus 50, 80, 80 plus 15, 95. Where is the remaining 5? That is the uncollectible. So these percentages are on the total only. So that is why I said there is no fixed pro forma here. The concept is very clear. Requirement of the questions will drive the working notes. There is no standard template that you can prepare. All right, let's see. So now, cash collections. So in April, we will receive 30% from February sale into 0.3. 30% is 0.3. Similarly, from March sale, we will receive 50% into 0.5. Then from the current month sale, we will receive 0.15, 15%. I'm assuming you are all following with me, right? So 30% of 2 months prior sales, 50% of last month sale, and 15% of current month sale. Similarly, in May and June. In May, we will receive 30% of March, 30% of March, and 50% of April, and 15% of May. I hope you are all with me. Similarly, in June, 30% of April, 50% of May, 15% of June. This is our cash collection schedule. All right, see here. That only I gave you in a more detailed and more structured manner. So cash collections from sales 2 months prior. So in April you receive 30% of February, that is 400 into 30, 120. So this is 120. What? Acha, okay. So April sales 30% you will receive in June. 120 received in June. This one 120. Similarly, May 30% you will receive in July. This 144 would be there in July collections actually. So this is wrong. April should be 180 into 30%. Let me correct that immediately. You guys also do it along with me. April collections, calculate the cash collections from sale 2 months prior. In April, we will not 400, bro. It's 120, no? February 180. Yeah, it's 180. Sorry for the mistake. 180 into 30%. So that would be 54,000. In April, we will receive 54,000. Then similarly, in May, we will receive 220. 220 into 30%, that is 66,000. Then in June, we will receive 40,000 400,000 into 30%, that would be 120. Yeah, 120. All right. Chalo, these are the collections. So in April, let's make it even more clear in the material. So here it is Feb sales. Here it is March sales. This would be April sales. So in June we'll receive 2 months prior, means May, April. Yeah, April sales. Yeah. So here it would be in April, March into 0.3, 220 in, 50% of March. So March, 50% of March, 220 into 0.5, 66,000. Sorry. Acha, 1 month, na? 220 into 0.5, 110. 220 into 0.5, 110. Okay. Then in May we will receive April sales, that is April is 400,000, 50% is 200,000. Then 480 into 50%, 240. That is correct. Okay. Only looks like the first table was wrong. April, May. Okay. So this is right. Then again, current month in April, April sales 15%, 60, 72, 102, 600. Okay. Only the first table was incorrect. Cool. All right. So April month total cash collection would be 54,000 plus 110 plus 60. 54 plus 110 plus 60, total 224. Next, May 66 plus 200 plus 72, 338. Then in June, 120 plus 240 plus 1026, total 462, 600. All right, there you go. It's a 625 pages cloud document. So every time a small change is saved, it has to save everything on the cloud again. So it's taking a lot of time. All right. These numbers should be changed again. Nah? This would be 224, 338, 46. Oh, here I gave correct numbers only. Looks like just that first table was messed up, but these numbers are correct. Good to know. All right. Chalo, so the total cash collected is clear. This is our first textbook example. All right. So now for your practice, we will do one more, just for your practice. Okay. All right. Let's see this practice question one. So the company has the following projected sales. So first, what I'll do is I'll just call this as textbook problem. Okay. Then this would be practice question one. All right. So what does this say? The company has the following projected sales: March, April, May, June, July. All right. So I'll just take this, paste it here, and delete the Jan. Move it one side, and here I'll add the July. Okay. Then what is given? Sales, projected sales are given. So I'll copy this. Actually, I'll copy this entire thing, and then put the values. March 150,000, April 180,000, May 330,000, then sorry 330,000, June 420, and July 600. Okay, so this is the project size: 150, 180, 330, 150, 180, 330, 420, 600, 420, 600. Assume that 4% sales are uncollectible. Okay, similar to the previous one. So I'll just copy this, paste it here, but this time it is not 5%, it is 4%. So the collectible amounts would be 96%, and here it would be 0.4. So just to the right, and this would be just that. Okay, so we got the 96% and the 4% uncollectible separated out. And prepare a cash collection schedule for the months of May, June, and July. We are required to May, June, and July, similar to the previous one, based on the following collection pattern: 25% from the sales 3 months prior. Okay, let's copy these numbers. Oh, I won't be able to calculate for May, na? May won't be possible. 3 months prior information is not available for May. You can only do for June and July. Yeah. All right. All right. So 25% from sales 3 months prior. So in June, 3 months prior means May, April, March. So out of that, 25% is collected in the current period. Okay. Then 30% from two sales 2 months prior. June means May, April. In that, 30%. Similarly, 25% from 1 month prior. June 1 month prior means May into 25% plus 16% from current month sales. June into 16%. Let's include that also. So total collected in June would be 37,500 from March, 54,000 from April, 82,500 from May, 67,200 from June. So same, I'll copy to the right. So July, 25% of April, 30% of May, 25% of June, and 16% of July. May, June, May, June. Okay. Just I'm doing some math here just for the clarification purpose. Give me a moment. So just cross confirmation, I just had to do that. So if you see, what I did was I just projected the cash flows for July now, August, September and October, assuming no new sales in the next 3 months. So there are no new sales, assume, just random assumption. So here if I continue the same schedule, so July, if you see 600,000 is there now, 16% is collected in the current month, 96. Then 25% is collected in next month, 30% is collected in the month after that, and 25% is collected in the month after that from July sales. So if I just total these up, then you can see this plus this plus this plus this is 576, but total July is 600. That is uncollectible is also there now, so we have to consider that uncollectible. So you can see 600 total. So I just wanted to cross check if the question was correctly framed or if I missed anything. So that was my validation basically. Alright, seems like I gave the correct question, so no issues there. So the June month collections would be 241,200. July month would be 345,000. So let me just copy this into the solution so that you can refer to that later. This would be the answer. So and July would be 345,000. So out. There you go. That is your practice question 1. Okay, I gave one more question, slightly changed this time. So let's see if you will be able to capture that difference or not, and if not, you should be able to you should pay more attention now. See here, a company has the following schedule for cash collections from current month sales. Okay, earlier we were talking about the collection pattern, 25% from 3 months ago, 30% from 2 months ago, 25% from 1 month ago. Now the question is saying that this month whatever sales is there, current month sales, 40% will be collected in the current month, 30% is collected in the next month, 20% 2 months later, 10% is uncollectible. So the framing of the question is different here. So you should be able to identify that. That is why I gave this question like this. So now what I'll do, I'll just copy this entire same story, but the formula will be the formula would be different and the method will be different. So let me do that. So Jan, Feb, March and April are given. Jan, Feb, March and April are given. So we don't have July, so let's just delete that. So Jan, Feb, March and April, I'll delete this, so everything else would be gone. So I also want to delete all this. Okay. So uncollectible 10% is given in the question, so I'll go with the 10%, and this would be 90%. So here into 0.10, copy that to the right. All right. So the projected sales January is 120,000, February is 150,000, March 200 and 250. All right, these are the sales figures given. Cash collections. So here pay attention, ma. 40% of the current month is collected in this month. All right, let me just copy this. Okay, let's delete that. Let's cut that here and paste it here. So 40% of the sales are collected in the current month. So immediately what I'll do, January into 40% is collected in January, February into 40%, March into 40%, April into 40%. This is straightforward. Current month sales into I'm not considering the uncollectible because already uncollectibles I subtracted above, so I'll ignore that. So 40% of the current month is taken. Next, 30% of the sales are collected in the following month. So January sales into 30% are collected in February. February sales into 30% is collected in March. Similarly, March sale into 30% is collected in April. 30% of the current month sales are collected in the next month. Similarly, 20% of the sales are collected 2 months later. So January sale 20%, remaining 20% is collected in March. And similarly, Feb 20% is collected in April. So now cash collection schedule total, if you see in Jan, we don't know these two numbers. This is not zero ma. Last year December 30% would be collected in January. Last year November 20% is collected in this year January. We don't know these numbers, so let's not do the sum there. We should not do the sum here. We should not do the sum here because we don't know those three numbers. Don't consider them to be zero. I hope you are able to feel my pain. Okay, chalo. So we can calculate the total collections in March 149, total collections in April 190. Sir, is it correct or not? Can we do a cross check? Okay, see, January, if I am taking January, 40% is collected in January, remaining 30% collected in February, remaining 20% is collected in March, and 10% is uncollectible. So if you check the total, 120, perfectly tallied. Similarly, let's do for Feb also. See, Feb 40%, 30%, 20% and 10%. So total is 150, 120, 150 total is matched. So my question is correct and my calculations are also correct. I hope you are able to pay attention. I'm assuming you guys followed what I just did here. The difference between this and this is very carefully to be considered, ma. It's not just a calculation difference or something like that. It's a complete structural change. The entire methodology is different there. So you'll have to be very careful with this kind of questions. Okay. So understand what is given in the question. That is why I told you at the starting of this lecture, I cannot give you a template and say follow this same template. No, this template has changed because the question framed differently. So every time the question is framed differently, a new template needs to be created. So if you don't know how to create a new template, then you are gone. That is why don't pay attention to the format or the template. Attention should be given to the calculations and the logic. Understand the requirement of the question, then start framing your answer. Don't blindly do anything here. Okay, chalo. So with that, I'll wind up the first lecture that is related to the cash collections. In the next lecture, we'll talk about the cash disbursements. All right, I'll see you in the next lecture. Keep smiling. Take care. Bye bye.